Will Powell and the Fed cut rates in response to Trump's pressure? Joining me today, Peter Grandich of Peter Grandich and Company. Always good to see you, Peter, catching up here ahead of the Fed. How are you, my friend?
Same likewise, always good to see you as well. Doing okay for an old man.
All right. Well, tell me, Peter, what's going to happen here? Do you think that the Fed caves?
No, not now, not in July. There would be outside of Trump's pressures, there's nothing historically that requires them to cut now. I do think what he will get out of them is more of a commentary that suggests September is much more likelihood now than it might have been a couple of months. Uh, People can say what they want. A lesser man, and I'm not a Powell fan. I'm not a member of his fan club, but a lesser man might have left by now, given the political onslaught that he faced. The fact that he remains there is, I have belief that he has intentions to see out his term, and I believe he's going to continue to act in his way. His only challenge that might have not existed a few months ago, there may be other members of his board there who have thoughts of maybe I could become his replacement and may be more favorable and speak out or even vote against keeping rates the same, thinking that that is a good move for them personally. But outside of that, I don't think there's any real opportunity of a cut here. And it'll be the next one will be September.
Well, let me ask you this, Peter. Are you in favor of cuts?
Well, I tell you what I'm more favorable of, as you know, I don't think there could be anybody more bullish on gold and some other metals as I am right now. I know there's people equal. But he said something, Trump, last Friday that was even more bullish about claiming he wants interest rates cut. He literally said he sees no upside to a strong dollar, and a much weaker dollar was much more favorable to him. That to me is more of an indication and what could be coming our way and favorable to the gold market than whether or not there's an interest rate cut or not. I think the Fed, first of all, let me say this, Danielle. This is kind
Yeah.
of important.
Yeah.
There's a dual economy right now. The upper echelon, the 10% that own 86% of all American assets, they're doing very well. To them, the economy couldn't be better, especially where they have a lot of their money invested in markets and things of that nature. The next 40% that own the remaining 14%, some are doing good, but some are falling to that lower echelon. And then half of America that owns no assets is struggling a lot. Eventually, the economy gets weighed by what the bottom is doing or not doing than how much the upper echelon could do. So to them, an interest rate cut of worthiness of 2, 3% could be the difference of whether or not they can pay electrical bill or a mortgage payment. We're seeing delinquencies in cars going up. So I think the Fed keeps that in mind, will have that more in the mind. But I also think it backfired at Trump being so heavy on him because I could see Powell not doing one here now just for the express purpose of 2 more months of Trump not getting his wishes. So
Huh.
you're not supposed to be political in the Fed, but I can't imagine, just like umpires sometimes favorable certain teams, whether they're trying to be objective or not. I think the Fed has its own political choices as well, and Powell's never been a fan of Trump.
Well, you saw how awkward that interaction was when Trump toured the facility, Peter. But you bring up a good point because my job as an interviewer is obviously to remain neutral. But I'm kind of scratching my head when I have some people coming on so bullish the dollar. When personally, as you said, I see the writing on the wall for the dollar. I mean, the administration has been clear that they want a lower dollar.
Yeah, well, there's a lot of things that you're absolutely right, and here he's openly saying that and all. And other than an extremely oversold condition, with the most crowded trade existing right now is short the dollar, and that's why a little counter trend rally should be happening. But let's not forget the first 6 months were one of the worst 6 months ever for the dollar. And
That's
whether you
right.
like it or not, and whether or not people don't want to understand the dramatic breakaway from the United States as a world leader economically, socially, politically, and all. We're continuing seeing slowly but surely that shift away from the dollar occurred. The BRICS did not fold up and die. They're growing. Their talk of how they're about to implement trading among themselves grows, which includes the Shanghai Gold Exchange and what's transpiring there, along with the BRICS. So anybody that thinks that the dollar has a lot of upside to it, I think is making a poor mistake. And quite frankly, it's one of the several bullish reasons why not only has gold gotten to where it's gone, but why I think it can go higher as well.
The worst 6 months, I believe, since President Nixon was in power. You mentioned your bullishness for gold, Peter, and I just came back from Rick Rule's great conference. And look, the room, obviously, there's gold bugs, silver bulls, but I don't remember the last time I felt that much bullishness in this space, Peter. Uh, h- any thoughts there? I mean, do you feel that as well?
Well, in that space, but they are very small minority of what makes up the whole investment community. We still see, even as recent as this last few days, Newmont Mining, the world's largest mining company, knocks the
Yep,
ball out of the park.
you're right.
Uh, Free cash flow records, and the sale of the GDX, which Newmont is a key part of, continues to be liquidated, not bought. So I'm certain there was bullishness at that seminar, but overall on Wall Street and in the financial community, they're still treating gold as kryptonite the same way they did when it was 1300, and also now, at 3,300,
You're
3,400.
absolutely right.
So I just think that the near perfect storm that is formed for gold, silver, copper, and uranium remains, and things that Trump is doing are bullish for all four of them. So that's why I remain so constantly strong in belief of those metals right now.
Big debate at that show was also the relevance of the U.S. debt. Is it something to worry about or not? There were, people on both sides of the debate there, Peter. I mean, what's your take on the increasing U.S. debt here?
So I started working on Wall Street in the dinosaur age of the early 1980s. And we didn't know what a trillion was as an advisor. We didn't have to use it for anything. There wasn't a trillion debt. There wasn't a
Right,
trillion of anything. We couldn't even tell you how you add up to a trillion.
right.
Now there's, 37 trillion. We're seeing an acceleration. Let's not forget, just a few months ago, every hour there was a social media post from Trump and Musk from the White House or
Yep,
somewheres, how deficit reduction is going not only going to occur, but we're going to pay down the debt too. And what do we have a few months later? They couldn't even they struggled to get $9 billion in reduction while they passed a huge bill that now people are starting to recognize when they read it and see it, that Social Security, which many people thought could at least last 10 years without any major changes, now is shrinking to as little as 5 or 6 because of that bill. So, the argument about this debt is this: if the Congressional Budget Office, which is really the last bastion of any impartiality, if there's such a thing still in Washington, D.C., says now we're going to 50 trillion in less than 8 years in the debt without taking into account a potential recession or even something worse. So let's just say they're right. They've been right so far. We've seen the tremendous growth in debt. There's nothing happening now that suggests anybody's going to slow it down, even let alone stop it. So put a 5% interest on that. Listen, you and I, especially me, are old enough where 5% used to be a very low interest rate. But 5% is a little bit higher than we've been in recent years, but not high. That's 2.5 trillion in a known interest expense that's going to have to be paid. The best this government has ever done in revenue is just a little under $6 trillion. And if you get some growth there based on, supposedly tariffs or whatever he's claiming now is going to add to our economy and all, we're getting to the point where people, they don't even consider about any of the debt being paid back. Can the interest expense be paid back? And here's the thing you'll be talking about in the coming months about the Fed,
okay.
whether they cut the September, December, whatever. If you and I are blessed enough to be on this earth a year from now, we will see that interest rates on the short end might be actually lower than they are now, but the long end could actually be higher. And that's going to be the dramatic change in the
Uh-huh.
bond market that you could see long rates increasing despite the Fed cutting rates on the lower end because concerns now worldwide, particularly since we depend on foreign investment to support our debt spending, is leaving us. We're seeing people paying less heed to our debt. We're also seeing competing markets in serious trouble. Do not overlook what's happening in Japan and what's happening with their own bond
Absolutely.
market, a
Absolutely.
real critical economy. So interest rates, when you say, yeah, interest rates can go lower and you'll turn on a financial media that's all they talk about, they could be right. You could have the short end lower, but it's the long end which is going to matter. And people must remember this, Daniela. As much as we like to talk about the stock market, the bond market is so much bigger and more important longer term than the stock market, yet we don't focus on it that much. So I do think that, and I understand what Trump's trying to get at. Listen, 2 or 3% lower overnight would lower some of the borrowing costs. It certainly would lift markets that are really in trouble now, the auto business, real estate. They're hurting really bad, and maybe a 2 or 3% somehow magically lower helps, but I just think the damage is done already. So I hate to be bearish, but it is, to me, seems to be the prudent road to take.
Well, Ray Dalio's definitely been sounding the alarm, like you said, on the bond market. But just to break things down for people watching, Peter, because I get stopped by people saying, I love the content, but sometimes the content goes over my head. And I know they're gonna have this question. Peter, when you say watch the long end, right, of interest rates, I'm sure some people watching will probably have the question, how does that affect me? Why is that important?
Well, first of all, let's face facts. Mortgages, which are probably the most important thing, that more people have mortgages probably next to car loans, wherever they run, part one and two, are based on what long rates are, not what the short rates are. So that's a critical factor. The borrowing, the mistake that the couple previous administrations made, the little lady that used to be in charge of the Treasury and then she was in charge of the Fed at one time, when they had the opportunity and when rates were so low, almost down to zero, instead of refinancing the short end of the markets and make it all long term at 1 or 2%, she let an entourage that just borrowed more money on the short end, which, yeah, for that time gave them lower costs. But now so much of that debt is becoming refinancing. Not only is 9.5 trillion coming due this year, but almost 28 trillion of the 37 trillion in the next 3 year has to be refinanced. So you start talking about 1 or 2% differences, that's a lot of money. And that's one of the things that also leads me to believe that, and I'm not the first to say this, Daniela, but that come next year, Trump is probably going to use gold in some way to back treasuries because that's going to be
Yep,
the thing people are going to want to have, to be willing to risk the possibility now that not only is my principal never going to be paid back, but you guys might start having problems paying the interest. So I want some security behind that. So I think
absolutely.
that'll be the big thing come, July of next year, that the gold market will be used to help fund some of our deficit spending.
That's what I'm hearing, and maybe that's why so many banks have turned very bullish gold. I mean, we're seeing the new forecast, $4,000 gold now, not seeming impossible, Peter.
Well, let me say this, see if you don't mind, Danielle. This is kind of really important. So I'm old enough to remember a guy named Robert Prechter Jr. before anybody knew who the heck he was. He came out in the early 80s. The Dow had just traded between 700 and 1,000 for 13 years. Wall Street was so bearish on stocks at that time that Business Week ran a front page cover, equities are dead. And on the old Wall Street Week with Louis Rukeyser, they were debating how it's going to be so hard for the stock market to go up. And this guy comes out of Gainesville, Georgia. No one knows who he is. And he says the Dow's going to 3,600 and it's going because of some Elliott wave theory that people didn't know about at the time. They scoffed at him and all. Well, the reason I bring it up, obviously, we all know it went a lot further. There's this still thinking in the gold business that somehow it should just be somewhere between 1,000 or 2,000. Yeah, a couple of reasons why it got ahead of itself, but it can't really go to 5 or 10,000 or 15,000. And I don't sell it. I don't have anything product that because gold goes to 10 or 15, I make more money other than I invested in the companies that look for it and produce it. But the bottom line is, I think we got to get rid of that thought and think that, yeah, that is legitimate. So when you say 4 or 5,000 or banks are talking about that, just look over what's happening in Asia. As we shop and spend money we don't have on the weekend on products we don't really need, the Chinese community is in stores
You're
physically
right.
and
You're
encouraged
right.
by their country to buy gold. That's what we should be looking at.
Absolutely. So well said. We are so blindsided by marketing and buying things we don't need at all. So well said, Peter.
Well,
Thank you.
that's why your parents and my parents and grandparents, they didn't know what public storage was. Even though they had a lot smaller dwellings, they didn't need or believe or be told that they needed all this stuff. And having too much stuff is what's gotten us in problems, including $37 trillion in debt that was non-existent before the gold
I
standard was
It's
reduced.
there's so much truth in what you're saying. I remember when I visit my relatives, my older relatives, especially back in Italy, Peter, and I'd be visiting my aunt and she'd like get something, she'd like, "Can you get that from the closet?" And I'd open her closets and I'd see how, first of all, how clean and Spartan almost, but basic they were. It was just basic needs, but your mind has more clarity. They don't need all these things that we're told we need here in North America.
He was not an economist, he wasn't even a believer in fate, but one of the greatest people that ever explained this in a comical way is George Carlin, and people should watch a bit that's on YouTube called Too Much Stuff, and it really helps explain what's led America into the problems that we have, and it's not just here in the United States, but it's profound here in the United States, that we've been convinced that more money and more things equal more happiness when nothing really could be further from the truth, and you only have to look back at your parents and grandparents, no
That's
matter
right.
what ethnic background, and you can see that they didn't live in that same belief.
Absolutely. Absolutely. Peter, I love catching up with you. Thank you so much. I believe you had some big celebrations in the family this summer.
Yeah, the daughter decided I married my wife, Mary, oh my God, I better remember, 40 42 years ago in Ireland. She was born and raised in Ireland, my wife, and my daughter treated us by getting married in the same identical church
Wow.
that we did, and she's my one and only, blessing of a gift, and, you walk that aisle, and I know you got the 2 young ones, and they're gonna go like this on you. That 30-second walk down the aisle, my entire life passed in front of me from the time she
Wow.
was born, being there
Wow.
to that moment, and, it was a great blessing.
You
Thank
just
you for
gave me what a blessing. How wonderful is that? How special is that, Peter?
Well, it was really special. Mother and I, we were married there, and it was enough for
Yeah.
me to go over to a I have no Irish background, so when I first went over, it was, dramatically different than it is now, but it was a special gift, and before you know it, those little guys are gonna be coming home with girlfriends, and before you know it, one
Oh
day, I know
gosh.
it's hard to believe, they're gonna go, "Mommy, I decided to get
No.
married."
No. I can't. Yeah. Well, let me not think about that, Peter. I am the that jealous Italian mom. I already see the writing on the wall for that. Um, Peter, we love you. We are grateful for you. Thank you so much.
Thank you, and God bless you, and know that the work you do, like I've always said, you're the first lady of financial journalism. I'm glad to see you smiling, looking good, and keep up the great work. A lot of people really appreciate the work you do, including those of us, that are so-called experts.
Amen. Thank you, Peter. Truly means everything to me.
God bless you.
And thank you for watching. We spoke so much about gold, and I always like to remind you that if you'd like to set up a free strategy session just to learn, or get started, or maybe you're midway in your gold purchasing, or you're a full expert, just call us. Have a chat about our content. We are there at ITM Training. You can book a Calendly in our the description below of this video. We'll have more great content coming your way. Peter Grandich just joined us for this, and we'll see what the Fed does. Stay tuned. We'll see you soon.